Legal bookkeeping, an exercise on bank reconciliations. This is an important part of the internal control mechanism. In bookkeeping, the bank reconciliation is a monthly process. When a firm receives its bank statement for a specific month, the bookkeeper cross-checks the bank statement against the firm's cash book to reconcile all the receipts and payments. This cross-checking of items and correction of errors is then recorded in a bank reconciliation statement. Bank reconciliations are performed in two parts. Firstly, we account for all transactions that have been processed on the bank statement but have not yet been accounted for in the business cash book. Secondly, we account for all transactions that have been processed in the business cash book but have not yet been accounted for on the bank statement. Let's take a look at an example to help better illustrate the principles outlined in the section Bank Reconciliations. Your firm's business cash book reflects an overdraft balance at 31 January 20XX of 64,739 Rand. The bank statement balance on the same date was 56,862 Rand overdrawn. A comparison of the bank statement and the cash book for January 20XX reveals that 1. Overdraft interest of 928 Rand has not been recorded in the cash book. 2. Trust and business account bank charges of 558 Rand and 394 Rand respectively have not been recorded in the cash book. 3. An unpaid check of 447 Rand from a client has been returned by the bank marked RD. 4. Insurance and motor lease stop orders of 54 Rand and 1,743 Rand respectively have not been entered in the cash book. 5. Checks issued totaling 8,992 Rand have not yet been presented for payment. 6. A deposit of 4,894 Rand is not reflected on the bank statement. 7. A check of 1,443 Rand drawn on the trust bank account appears on the bank statement. 8. A deposit of 9,346 Rand made to the trust banking account has been incorrectly reflected on the bank statement. You are required to 1. Prepare a supplementary cash book for January 20XX, and 2. Prepare the bank reconciliation statement at 31 January 20XX. Firstly, we look at the transactions that have occurred on the bank statement and that have not yet been accounted for in the business cash book. We start with the supplementary cash book. Look at the items that appear on the bank statement but do not appear on the cash book. At the beginning of the question, it states that the business bank account reflects an overdraft of 64,739 Rand. You would post this balance on the credit side of the supplementary cash book as the cash book is overdrawn. Now we are ready to look at each of the transactions one by one, and by the end of the exercise, you should have an idea of how everything fits together. Transaction 1. Overdraft interest of 928 Rand has not been recorded in the cash book. Remember the rule: debit the receiver and credit the giver. Interest paid is an expense. So, you will credit the supplementary cash book as you are giving money to pay the expense. Transaction 2. Trust and business account bank charges of 558 Rand and 394 Rand have not been recorded in the cash book. Apply the rule: debit the receiver and credit the giver. Bank charges are an expense. So, you will credit the supplementary cash book as you are giving money to pay the expense. Transaction 3. An unpaid check from a client has been returned by the bank, marked RD. Apply the rule: debit the receiver and credit the giver. When we originally received this check from the client, it had been debited to the cash book, debit the receiver, as this was income. As the check is unpaid, we now need to reverse this. And so, to reverse the original transaction, we now do the opposite of the original transaction. We therefore credit the unpaid check in the supplementary checkbook. RD means refer to drawer, and this is a term used in finance. It means unpaid, and the check is returned to the drawer or payee as proof thereof. Transaction 4. Insurance and motor lease stop orders of R54 and R1,743 respectively have not been entered in the cash book. Apply the rule: debit the receiver and credit the giver. Insurance and motor leases are both expenses, so you will credit the supplementary cash book as you are giving money to pay these expenses. Balancing. You have now posted all transactions in the supplementary cash book. Once you balance, there will be a new balance for the supplementary cash book. This is the business cash book opening balance reflective of all the transactions that were not accounted for. The supplementary cash book now has a new balance, and the next step is to balance the bank statement to the new adjusted supplementary cash book balance. Part 2. Now we take a look at the second part of the bank reconciliation, where we account for all transactions that have been processed in the business cash book but have not yet been accounted for on the bank statement. You use the opening balance for the bank statement that has been given at the beginning of the question. Transaction 5. Checks issued totaling R8,992 have not yet been presented for payment. Checks have been deducted from the business cash book balance and therefore must be deducted from the bank statement balance in order to reconcile. Transaction 6. A deposit of R4,894 is not reflected on the bank statement. The deposit has been added to the business cash book balance and therefore must be added to the bank statement balance in order to reconcile. Transaction 7. A check for R1,443 drawn on the trust bank account appears on the business bank statement. This entry is incorrect as we are now dealing with the business bank account and not the trust bank account. A trust check should not reflect on the business bank account. This amount must be added to the business bank account balance to rectify this error. Transaction 8. A deposit of R9,346 made to the trust banking account has been incorrectly reflected on the business cash book bank statement. This entry is incorrect as we are now dealing with the business bank account and not the trust bank account. A trust deposit should not reflect on the business bank account. This amount must be deducted from the business bank account balance to rectify this error. We now balance our bank reconciliation. The adjusted bank balance at the end of the reconciliation process is now the same amount as the closing balance of the supplementary cash book. This means that all transactions have been correctly accounted for and all entries have been correctly processed.